Have you ever wondered how a conflict thousands of miles away could directly hit your wallet? It's a scary thought, but it's something we need to talk about. The rising tensions between the United States and Iran aren't just headlines, they're a massive red flag for the global economy. If this situation escalates into a full-blown war, the shockwaves will be felt everywhere from the gas pump to the stock market. Let's start with the most obvious impact: oil prices. A significant portion of the world's oil supply passes through a narrow waterway called the Strait of Hormuz, right next to Iran. If a war breaks out, this crucial shipping lane could be disrupted or even closed. Imagine 1/5 of the world's daily oil supply suddenly vanishing. The result: oil prices would skyrocket. We're not talking about a small jump. Some analysts predict prices could soar to over $150 or even $200 a barrel. For you and me, that means paying a lot more to fill up our cars. But it doesn't stop there. Higher fuel costs drive up the price of almost everything, from shipping goods to your local grocery store to the plastic used in countless products. Inflation would spike, squeezing household budgets across the globe. Next, let's look at the financial markets. Markets hate uncertainty, and war is the ultimate uncertainty. The moment conflict seems imminent, investors will panic. They'll rush to sell off risky assets like stocks and pour their money into safer havens like gold or government bonds. This could trigger a massive stock market crash, wiping out trillions of dollars in value. Your retirement savings, your 401k, your investment portfolio all could take a major hit. We saw a glimpse of this volatility every time tensions flared up in the past. A full-scale war would be that on a much larger, more devastating scale. The economic instability could spread like wildfire, causing a global recession. Businesses would stop investing, hiring would freeze, and layoffs could become widespread. Beyond oil and stocks, global trade would be crippled. Shipping routes would be rerouted, making them longer and more expensive. Insurance costs for vessels traveling anywhere near the conflict zone would go through the roof. This would create huge bottlenecks in the global supply chain. Remember the supply chain issues we faced a few years ago? This could be much, much worse. The flow of goods from electronics to food would slow to a crawl, leading to shortages and even higher prices. For countries heavily reliant on international trade, the economic pain would be immense. And let's not forget the human cost. Millions of people in the region would be displaced, creating a massive refugee crisis that would strain the resources of neighboring countries and international aid organizations. The ripple effects are truly global. Emerging markets that depend on stable oil prices and global trade would be hit especially hard. Countries in Europe and Asia that are major importers of Middle Eastern oil would face an energy crisis. Even the U.S. economy, despite being a major oil producer itself, wouldn't be immune. The cost of a military conflict is enormous, adding trillions to the national debt. That money has to come from somewhere, meaning higher taxes or cuts to other essential services down the line. It's a chain reaction where no one wins. So, what does this all mean? It means that peace and diplomacy are not just abstract ideals. They are economic necessities. The prospect of a US-Iran war is a threat to the stability and prosperity of the entire world. It's a reminder of how interconnected we are and how a conflict in one corner of the globe can create economic chaos for all of us. Let's hope that cooler heads prevail, because the economic price of war is one we simply can't afford to pay. Thanks for watching, and if you found this breakdown helpful, be sure to like and subscribe for more deep dives into the issues that shape our world.